I hate to say it, but virtually everybody is wrong in the investing community when it comes to PayPal, especially after these earnings, which we're absolutely going to recap today too as well. This is kind of one of those rare times in investing where we're kind of at an inflection point and there are tons of differing opinions on where the stock is going from this inflection point, which of course means massive change. But the vast majority of discussion I've heard about that change has been absolutely completely wrong. So if you own PayPal stock or want to own PayPal stock, it is critical you understand these 3 facts about PayPal that everyone gets wrong, so you don't get it wrong too. And we'll kind of discuss and recap the earnings as well for PayPal. So don't forget to like the video if you like facts. So let's jump into the facts for PayPal with fact number 1, and that is PayPal's growth will be slower than everybody thinks. To do everything that the new CEO talked about, it's going to take time. You don't change all your internal processes and the way you do business and all the other internal communications, everything involved in the company internally in just, basically a few weeks. You don't revamp your entire product suite and make it better, more user-friendly. You can't get that accomplished in a couple of days. You just basically can't revamp an entire company in a quarter, guys. I wish it was that way. I wish that you could, but you just can't do it. It's going to take time. It's going to take money. And yes, that means it's going to hurt numbers as well. But that's part of making big wholesale changes in a company like the new PayPal CEO is looking to do. Change always disrupts, always upsets. And when you're making changes like they're making, it always takes time, which dovetails perfectly into fact number 2. And that is that this is not a meta-style situation. Now, in terms of disproportionate opportunity, and when you're trying to describe that opportunity, it's similar. It's not the same, but I would agree that it is absolutely similar, but that's not really what I'm talking about in regards to it not being like the meta-style situation that we just had. What went on with Meta was basically kind of like a once-in-a-decade opportunity, and I have no idea why it just seemed like nobody could see the opportunity there. If you just paid attention to the earnings calls and looked through the actual numbers, get rid of all the narratives and all the other crap that was going around it or anything else that was kind of surrounding Meta stock, when you looked at the performance of the company and then you looked at what the valuation was, it didn't matter whether or not it was a dead growth company, it was a value company. It was still trading cheap for a value company. That's how utterly ridiculous that opportunity was. And I don't know how people missed it. And so now compare that to PayPal, where I think the opportunity is incredible as well, but it's not a once in a decade or a once in a lifetime type opportunity like Meta was. It isn't that good of an opportunity. It just wasn't as clear cut or as easy to identify the opportunity like it was with Meta. I'm sorry, it's just not. PayPal also didn't get the beatdown that Meta did. Look at the difference in the valuations for Meta at its lows and PayPal at its lows. PayPal, although the beatdown has been incredible, it has not been as great from a valuation perspective as it was for Meta. Meta's beatdown was just epic. I'm not sure I've ever seen one in my 20 plus years in the market as epic of a beatdown for such a great company putting up the numbers that Meta was putting up versus what happened with Meta last year. Zuck didn't have to redo his entire business inside and out, but PayPal, unfortunately, has to redo their business both internally and externally as well. Meta really only took 1 quarter to see a massive sea change in what was going on with the business there, but that's not going to be the same exact thing that we're going to see with PayPal. PayPal is going to take a lot more time before we ever start seeing massive results in the earnings in regards to PayPal versus what we saw, which was basically an immediate flip around in regards to Meta. Now, are they similar? Yeah, I can draw some similarities, absolutely. And a lot of times that's kind of the easiest way to describe the opportunity is to kind of look at Meta from last year and kind of draw a similar arc for PayPal. But they are not the same opportunity there. It is not as clear cut as it was with Meta. And fact number 3 is PayPal is not a value company, so its multiple will rise once again. The strongest statement from the new CEO was a statement he gave right off the bat, where he very, very clearly took a shot out to Wall Street and said, we are a growth company. And what he's doing there is he's sending this directly to the analysts, to the other investors on Wall Street, the big investment firms, everything, saying, hey, this whole narrative that we might be a value company now, we might be transitioning from growth to value and all those sort of things, that is not the case at all. And we are 100% going for it. He didn't, twinkle tool his way around it. He didn't kind of say, well, we're hoping to, restart our growth engine again. He was definitive. We are a growth company, and he was sending a direct message to Wall Street about that. Now, I'm also not saying that they deserve a multiple of 80 or something crazy like that. Like I'm sure somebody who wants to put out some ridiculous bullish price target for PayPal is going to do at some point in time and then try to justify how somehow it's going to trade at an ADP or something like that. That's utterly ridiculous. But do I think 25 is reasonable? Absolutely, I think that it is. And do I think if they're able to kind of reinstate and reinsert themselves into that double-digit growth category, quarter in and quarter out, if they're able to do that, could we potentially even see 30s in some cases? Yeah, that's honestly not out of the realm of possibility. Both of those things, I think basically, trading in the mid to upper 20s is probably absolutely going to happen the moment they start to perform. And then, of course, that multiple could rise even higher if they execute on a higher level to deserve that multiple. So given their current numbers right now, the only way that we stay kind of in value territory and kind of multiple kind of moves closer and more into value territory is if the new CEO's plan completely flops. And I mean, guys, it has to flop epically in order for that to happen. If it's just moderately successful, we are going to see that multiple go back up into the growth multiple levels. And that right there is huge for us as shareholders. With those facts in mind, here's my impression on the earnings call, which I told you guys was the biggest in the history of their company right there. I don't use that term often. I'm not one of these YouTubers that get on here and say, hey, it's the biggest week ever in the stock market, just to say the same exact thing next week in the stock market, or this about this earnings, or this about this news, or whatever the case is. I don't like to say those sorts of things. But in the case of this, given where PayPal was at, given the huge inflection point the company was at, this new CEO coming in and setting the right tone, the right message, and laying out the right vision showed us everything that we needed to see about PayPal. Are they truly going to actually be able to innovate and get back into that growth category again? Or are we going to continue right on with the status quo, which means we were on the train to becoming a value company? So here are kind of the highlights that I got from the earnings call there. I gave it full breakdown to my group. Only those guys are crazy enough to want to listen to me for as long as some of those things take and such. But here are the highlights that I got from the earnings call this time around, and especially from the new CEO. And he gave Wall Street everything that they could want to have. And I know if you haven't been doing this for a while, I've been doing it for 20 plus years. There was a lot of coded language kind of laced throughout the entire earnings call that was very strategic and very specific, that sent a very specific message to hedge funds, to large institutional investors, to the current institutional investor base who are maybe questioning their position in PayPal, and should they continue to go on? Should they jump on board with this new CEO and his vision? He coded and used that language throughout. It's easy to miss if you don't understand where it's at or exactly what he's trying to say or what that actually means. It looks like it means one thing. He's actually sending a completely separate message altogether, or there's more force behind that. It's not just, hey, we're a growth company, kind of like we discussed earlier. He was very specific with how he made that statement, so that way the message was clear to Wall Street what they are and what they aren't. They're going to focus on growth and revenue, and more importantly, growth and profits, and being more and more profitable. And they are no longer going to just chase customers just to chase customers and things of that nature. That was how they quote unquote grew in the past, and it's artificial growth. It's not actual growth that you want to see, sustainable growth that actually provides you money to the bottom line. That right there is what they're focused on. And every single message he sent out in regards to what they're going to do, that right there was kind of the key goal. Where they're going to get at the end is driving more and more profits. They're going to be cutting a lot of their internal processes, and more importantly, going to be cutting a lot of staff to kind of accompany that. Basically, when he took a look at the company, he saw a lot of their internal systems are either redundant, they're useless, or something that should take 30 seconds to do is taking 3 weeks to do because it's got to go through multiple different internal systems. And, I'm sure there's a ton of red tape and a lot of other things like that in there that are preventing things that should take no time, taking a lot of time. And of course, that also means you're going to get rid of that. And it also means you probably got a lot of dead weight hanging around too. He kind of alluded to that again. He didn't say it directly, but the message was very clear. They're going to get rid of a lot of that. And the same exact thing applies externally to their product suites and such. They're going to be streamlining those, making them more effective, making them more integrated, and essentially in the end, driving more profits because you're going to make it so easy for people to do things and to function in a way that you're able to drive more profit to the bottom line. You're going to see big changes both inside and outside the company. And again, he reiterated it's going to take time. He did not say we're going to see all these changes next quarter. He did not say we're going to see massive growth in profits, next quarter, you just wait. Nothing like that. He's letting us know it's going to take time, but those are the goals that they're driving to. They're even going to change their earnings call to basically reflect their goals and what they are doing to move towards the vision he just laid out. They're not going to give you the whole hum basic earnings call where we kind of cover the basic numbers that everybody wants us to cover. Yeah, we're seeing a little growth here, whatever. They're not going to do that anymore. They're going to, obviously, they'll give us those numbers, but they're going to highlight the things that are going to drive towards that vision, towards that growth engine kicking back up again, and not cheap quality, high quality in terms of, customer acquisition, keeping customers, increasing the cost per customer, and all sorts of things like that. So for me, I could not have been any more happy. I was so pleased to hear that he was given the reins to actually grow the company and actually make wholesale changes, because that was something I was afraid they were going to kind of try to do the hybrid of, well, let's not change too much, but you can change some things, and let's try to grow through acquisitions, and let's do all these other things that typical Wall Street firms do when they don't want to make wholesale changes to the business. And at least from this earnings call, it looks like he is going to make those changes. So I'm very pleased. I'm a very pleased shareholder, but it's going to take time. It's going to take patience. So just relax. Sit back. You're going to get plenty of opportunities to continue to add to this stock if you want, and just execute to your plan. And if you want help building out that plan, you want to see my watch list complete with price targets, you want to see all the buys that I make in PayPal moving forward, you want to be able to talk to me about this earnings or any other earnings call, you want to be a part of the best 6, 7, and 8-figure Discord out there, you want to take 5 courses for free, use our stock analyzer tool for free. Guys, there is so much in this group, and it's the best value out there. Make sure you check out the pinned comment and take advantage. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.